Hello, and thanks for joining us today. I'm super excited you could be here because today we're talking about how to save in the area you need to save the most because it's where you spend the most money, which is on taxes. And so many entrepreneurs are reactive in this area. They're dealing with an accountant that's just doing things after the fact, and there's no planning. There's no strategy involved in the beginning to be able to help you save the money. You got to have the strategy in order to stop paying additional taxes you don't need to pay. And that's exactly what we're going to show you how to do today. So with us today is Mark Kohler. Now, Mark is an acclaimed tax and legal expert who is dedicated to helping entrepreneurs and small business owners achieve financial success. Now, as a founding and senior partner at KKOS Lawyers, he specializes in tax, legal, wealth, estate planning, and asset protection services. He's celebrated for his commitment to nurturing the American dream of his clients by expertly guiding them through complex legal, regulatory, and financial laws. Now, in addition to his law firm, he serves as the chief financial officer and sits on the board of directors of the Directed IRA Trust Company. Mark also co-hosts two popular podcasts, the Main Street Business Podcast and the Directed IRA Podcast, where he discusses legal and tax strategies, asset protection, retirement investing, and wealth building in an engaging way. He's also the author of multiple books aimed at empowering business owners and has a huge social following as well. So through Mark's work, his speaking engagements, training programs, and online presence, he has become a renowned influencer in the finance and business world. His mission is to provide comprehensive knowledge and practical guidance to small business owners on structuring their businesses, assets, investments, and estates to maximize growth and legally build wealth. Now, Mark is truly dedicated to empowering the Main Street business owners to achieve their American dream. Mark, thanks for joining us today.
Well, thanks for having me. What an introduction. I appreciate that. What an honor. And who is this guy? Let's get him on here. I want to talk to him.
Well, we could make the whole show just about your accomplishments because you've done so much, and you're like the man, like the main person in the accounting field around the country. So congrats on your success.
Well, thank you. I'm the king of the nerds. So you got to do what you got to do. So I love it. Yeah. I'm the most popular guy at a dinner party. Not so. Anyway, once I find out, hey, I can save you money. I do build a little crowd around the drinks. But
yeah, well, you're saving money in the area that we dislike the most. Yeah. So let's start there. I mean, where can entrepreneurs really benefit just by understanding, tax laws in general and kind of how the system works? I mean, what do you see from your audience that they're actually benefiting from having this knowledge?
Well, I actually like the way you just said that just understanding the tax law in general. That's so important. So many entrepreneurs think, hey, I'm just going to hire a good accountant. Oh, that was my dad's accountant. That was my mom's accountant. That's just the family accountant. And they think, oh, they're a CPA. They must be good. No, you can hire a crappy contractor to remodel your kitchen. You can hire a crappy CPA to work on your tax return. And like you said, 95% of the time, it's an after the fact experience. It's not proactive. And so if everyone out there could just know enough to captain their ship, you don't have to be the first mate. You don't have to be crew out there pulling lines and ropes and doing all the work on the ship. You got to know where you're headed. You got to understand the direction, the course, and some of the strategies. And once you know some of the strategies, holy crap, half the time you know more than your freaking accountant because they're stuck in their old ways. They don't want to have a conversation. They're conservative. And I love my accountants. I've been a CPA for years. It's taken me years of therapy to get where I'm at right now. So I know how hard it is.
Well, and I think this is interesting because it's so many people are reactive. And I know I've been there where I get that tax bill and I go back to my account and they go, what can I do to not pay all this money, right? But the reality is it's too late. And I realized that the hard way that you can't do that. You have to be way ahead of this on the planning side. And as entrepreneurs, I don't think we understand this because we just think we go to accountant, we give them our stuff, they tell us how much we owe, but we're not into the planning side. So what's wrong here? What's wrong with the system where we don't understand the importance of planning?
Well, the business owners understand the importance, but they hit a wall. Now think about that. This is deep. So you go to your accountant in April, May, June, July, you extend, whatever. You bring your tax work in, you go, hey, how can I save for last year? Well, it is what it is, you owe. Blah. And then you say, what can we do different? Now just think, if the accountant says, well, this year, let's get your kids on payroll. Let's write off a board of advisors trip with your family. Let's write off some real estate in a more creative way. Let's do this, that. Okay, then where are they standing right now? You're going to say, well, why didn't we do that last year? And they're in a bad spot. So it's weird because if you go to them and say, let's strategize and plan, and they come up with something, your next phrase is, why the hell didn't we do that last year? And they don't want to be in that spot. So they just give you the same old shiz. Well, you're doing all you can. Let's write off this and that. And then if you bring up home office, they're like, whip, whip, whip. Oh, that's an audit risk. Holy crap. This was the kid that was in the band on this bleachers in the stadium at the football game that's scared of their own shadow. You want to be talking to the guy that was under the bleachers smoking pot. You're like, come on, let's give me some strategies here. And so so a lot of times you just have to hit reset. You have to find an accountant that's proactive and wants to have the meeting in the summer and the fall. Our busiest time of the year is November to December. We don't even allow our employees a break except for the major holidays from October 1st to December 31st. We're not busy in April. We don't care about April. We're just reporting shit then. What we're trying to do is be strategic in the fall, because once December 31st hits, party's over. If you didn't get a strategy in place before year end, it's over.
And I don't think I've never heard that from anybody in the accounting field before. Like that, everybody's talked about the busiest time being April, not in the planning side.
Yeah. Is that crazy? Like, if you want to get an appointment with me in December, you better start calling early October, because that's when business owners know the rubber meets the road. Hey, how much am I going to put in my 401k for year end? Am I going to put my spouse on payroll? Should I pay my kids in college that are managing my rental property? How much should I 1099 them? Should I pay my kid under age 18? Am I going to fund a Roth IRA? Am I going to fund a health savings account? What should I set up insurance wise before January? These are all questions that are over on Jan 1.
So we've acknowledged you really need to change if you're in that boat. The question is that, like, how do you change? That's a nightmare for us as entrepreneurs. We don't know what to look for. We don't know the questions to ask the right person. How do we find somebody who's on the planning and strategy side and not just on the reactive side?
You bet. There's several steps here. And I'm going to give you a couple tips to your listeners before we're done today, like literally actionable items that if your accountant's not talking to you about these, you've got a red alert situation already. So number one, you've got to know a few strategies. Holy crap. If you can't, you got to be able to walk into an accountant and interview them and go, hey, I want to be aggressive with my home office strategy, or I want to do short-term rentals or long-term rentals, or I want to do some syndications, or I want to invest with a Roth IRA in a creative way. I mean, just know some strategies. I've got a 30-point ultimate tax strategy guide that's downloadable on my website. Just 30 different strategies. You don't have to be an expert. Just know 25 of them. So when you talk to an accountant, you can at least hold them a little accountable. And the strategies I'm teaching are not high risk. But number two, go out and just what I said, interview. Say, go out and make an appointment with an accountant. And if you can't even get an appointment with them, you've already got a problem. Accountants are not the best communicators. Neither are lawyers. I'm trying to change the industry every way I can, but creating that conversation is a battle. So you've got to be tenacious. Ask around. Ask your other buddies. Who are they talking to? Who are they working with? And third, what I've done the last 18 months, and Ty, we were talking about it before the show, I've created a Tax Pro certified network. I started it over 2 years ago because we were so busy. I thought I've got to just focus on training other professionals and not just try to feed my own firm that had a 3-year wait list. And so I created a certification internally for my own CPAs and lawyers, and then branded it. And I'm now training. I've got this year over 600 CPAs and enrolled agents around the country in 42 states. And if you want to go check one out, I don't make any money off them. They pay me to get trained on 80 street smart tax strategies. They have discovery call links on their site. It's required. They've got to be easy to get a hold of. And they're on my network. And if you go to markjkohler.com, you can look at the Tax Pro Network. It's like a LinkedIn page of accountants that strategize. It's insane. And so go interview a few young, old, male, female, East Coast, West Coast. They don't need to be down the street. And heaven forbid they're 80 years old because they were your dad's accountant. Can we move on? Jeez, sorry.
So if we go to about this. markjkohler.com, then we're able to get the 30-point guide, right? And also tap into your network of people that do know what they're doing, that are good on the strategy side.
Yep.
Okay. And we're talking about that at the end of the show too, but that is Mark, MARKJ, and then KOHLER.com. Yep. So go grab that. Everybody, you're watching this, go grab the 30-point guide. And then is it the checklist or guide?
Yeah, guide, 30 ultimate
30
tax
point
guide.
guide. And then also you got to tap into the network. That way you don't have to go through the nightmare of trying to look to find somebody that actually knows what they're doing. Misconceptions. What are there? What other
Well,
misconceptions do you see that entrepreneurs have that you're like, oh my gosh, like when am I ever going to fix this out there where nobody has these misconceptions anymore?
well, one of the misconceptions are that my taxes are just what they are. It is what it is. Like all accountants are the same. It's a commodity. I'm just going to plug in the numbers and it is what it is. And that's not true. And I guess I'll use the metaphor again of the kitchen. I haven't talked about this in a while, but if you say I'm going to remodel my kitchen, you could get 5 different contractors to do 5 different workups or designs, some that are very creative, some that are more expensive than others, some that are done sooner than others, and some that are very collaborative, right? You could have 5 different experiences with 5 different kitchen designer contractors. It's the same thing with the tax return. You don't learn how to prepare tax returns with a CPA exam and a master's degree and a law degree and working. I've done it all. I've done it all. I go to continuing education courses. I've written books on this from what I learned on the streets, going out and networking and talking to other accountants, like what works and there's a new court case every week in America on tax strategies. Accountants have to be proactive to stay up on that. I'm trying to do that and then share the wealth. And so that misconception that all accountants are the same, it could not be further from the truth. You've got to find one that meets your aggressiveness when it comes to risk tolerance and strategy and your industry and what you want to do. And Ty, I've got to just say this because you mentioned the guide, and I'm not trying to be self-serving here. I want people to have some options here. I've got a podcast with over 500 shows, 3 million downloads. I've got 15 million impressions on my YouTube channel of every strategy I teach. I've got 4 different books on Amazon. So whatever the medium is you like, whether it's video, podcast, reading, come and start learning a little bit. One of the influencers you've got to listen to is a tax influencer, a legal strategist. What type of entity do you have? An LLC, an S Corp? What state is it set in? Are you registered properly? Do you have a board of advisors with your family members? How is it structured? And if it's not me, that's fine. Just find someone, because this is a key person on your ship and you're the captain. You cannot sail without this person on the ship.
Yeah, and there's so much, on your website. And again, everybody, that's Mark, M-A-R-K-J, Kohler, Kohler.com. You can get to his social media pages there, massive following. You can get to his blog there, podcast. So many things that can help guide you in the right direction are right here on this page. So make sure that you check that out. So give me an example of like some of these expenses that we can deduct that we don't realize we can. For example, that might even be too basic of a question to even answer.
No. It's good. I'll just rattle off. I'll just do 5 for fun. 5 strategies. I got to have another drink of my Rockstar because I'm a Rockstar accountant sponsored by Rockstar. They sent me Rockstar drinks because they're like, we need a Rockstar that's an accountant. So I got to continue to drink.
Do you get paid for this endorsement? This is fantastic. I love it.
I just get free Rockstars. So they're trying to kill me. So anyway, okay. Number 1, the S corporation. S is in small. The S corporation is the number 1 tax strategy for small business owners creating ordinary income. Every dentist, doctor, contractor, influencer, Etsy seller, lawyer, accountant, restaurant owner, we're all S corps. You have got to look at the S corporation in saving in FICA and setting up the proper salary dividend split. So it's a salary pass-through K1 split. Now, a good accountant, they're out there. You just got to be able to talk to them. When you meet an accountant and go, hey, I love the S Corp strategy. What do you think about the payroll allocation? Now, if they glaze over and look like a deer in headlights, you got the wrong accountant. If they go, oh yeah, I'd love to be aggressive with that. It's totally a scare tactic that older accountants think you need to have a big salary and all it's a reasonable comp and blah, blah, blah. Yeah. I go to every reasonable conference. I read every case on it and I teach on it and write books on it. I've never had a client audited in 25 years, thousands and thousands of S Corp tax returns where the payroll was not correct. I've interviewed prior IRS agents from the Chicago S Corp office on my podcast. I know what I'm talking about. So if you're an accountant listening now, get over it. It's okay. You can be strategic with the S Corporation, number 1. Number 2, Getting your family involved with the board of advisors or board of directors. I've talked about that all the time. It's a great asset protection tool because you need to be maintaining your entity. By the way, that one sheet of paper at LegalZoom is not a freaking entity. Good luck in court or an audit. You need your corporate book. You need minutes. You need a bylaws. You need an operating agreement. You need all the provisions for tax deductions in your minutes. Every year, you got the new BOI FinCEN report due by December 31st. Get on it. You can't leave this paperwork in the drawer and think it's okay. Well, when you clean all up your corporate records, you create a board. I want your kids from 12 years up on the board. I want your college students, your mom, your dad, your spouse. They should be on your board of advisors, board of directors. Every corporate trip for a holiday or a weekend training, all of this can be a write-off. Dining, travel, it's so underutilized when it comes to the family. A family is a business. A business is family. Why are we not teaching financial literacy more to our family and our children through this incubator, this incredible tool we have of a Main Street business in America? The backbone of America's small business. Are we passing that on as a legacy to our children? Board of directors, board of advisors, perfect tax strategy. Love it. Sorry, I could jump to the other three here in a second. Thoughts or questions you might have or comments on that?
LLC versus S Corp. I get this one all the time from entrepreneurs. So which one from your perspective is the better one? You dove into S Corp, but LLC versus S Corp.
Okay, third strategy, the trifecta. So I teach this, it's trademarked by me, the trifecta. It's a three-legged stool for your entire tax and legal organization. This is tip number 3. On the left side, I have operations. Can we go to whiteboard? Can we do that for fun? Can we knock
Absolutely.
it out? Throw it up, Jack. Okay, let me see if we can throw this up. Okay, this is what it looks like. So down here at the base of your trifecta is going to be your revocable living trust or your 1040 tax return. All the money flows downhill. So this is the base of your trifecta. Then over here on the left is your operations. On the right side are your assets. We want a firewall for asset protection between our operations and assets. Now, operations, let's do an example of a realtor and a rental property. A realtor may start out as an LLC, but they're going to convert to an S Corp once they're netting more than 50 grand a year, probably 40. Anybody listening to this, if your net income of your LLC is more than $40,000, you're losing money by not converting to an S Corp, period. I've proven it over and over again. So you want to take the LLC and convert it to an S Corp. It's super expensive, Ty. We charge $250. Yeah, I know. Buckle up. It's off the chart. I know. But to save $4,000, $5,000, $10,000, you might want to spend $250. Holy whatever. Okay, so the LLC is a shell. The LLC becomes an S corporation with a simple 2553 form, 2-page form. Make sure you sign front page and second page. Now, that is operational. All of our sales, products, services, online, URLs, DBAs. I'm going to have one S Corp. We're going to have multiple subsidiaries. It can get very elaborate, but I have one S Corp that's your parent company for all your operations. On the right side, we use the LLC for your holdings. So over here, I'm going to put a rental property. You never, ever, ever, ever put a rental property in S corporation. No, the LLC over here holds the rental. The S Corp over here is the realtor, and the trifecta is born. Your revocable living trust owns your LLC or S Corp, or LLC taxed as an S Corp, same damn thing. And then your LLC owns your rental. Then we get into, I've got books written on how many LLCs do we need? One for every rental? Do I put 5 rentals in that LLC? Where do I set up the LLC? Am I going to run down that Wyoming strategy? Am I going to use a series LLC? All of those questions are up next, but we're going to build this asset side to create asset protection, passive income. Are we going to use the -4 election with a self-rental? Are we going to do short-term rentals with the new material participation exemption? Are we going to do a real estate professional strategy and get pass-through losses? What about syndications? You should know these answers just off the top. As a regular real estate investor, you should know how to explain that in 10 minutes. It's not that hard. And so you might have a rental or a building that you rent back to your business. So this side could be the dentist, and the right side could be the building. So we create that left side, right side, ops for ordinary income, which we're going to get killed with FICA. That's why we've got to do S Corp. We hate FICA. What the FICA? Hate FICA. All right. But the LLC is the passive income or the passive losses. And this is why Donald Trump paid $600 in taxes in 2016 because he was able to elect real estate professional status for all of his real estate investments. All the pass-through depreciation and cost seg came through and wiped out his income from the apprentice and all the other retail establishments because he was a real estate professional. Joe Biden had an S Corp in 2016. I've got both of their tax returns here. I don't care if this is Republican, Democrat, it's policy. Joe Biden had a book deal for $13 million in 2016, the year he ran for president. He ran it through an S Corp with salary of 700 grand. 700 grand in salary on 13 mil. Of course, that was on page 42 of the Wall Street Journal, but Donald Trump was on front page, heaven forbid. But they both were using great strategies, both great strategies. S Corp for operations, rental property LLCs. That's where the trifecta brings it together in a picture. And at the bottom, your revocable living trust owns it. We're creating privacy, legacy, estate planning, and it all drops into your 1040 and a river runs through it. Brad Pitt.
Mic drop. I mean, it's powerful stuff. Now, from somebody like my perspective, that's overwhelming. And I'm sure you probably can imagine. So how can I get all that done without wanting to learn how to get all that done?
Because you're not, Ty, you're going to effing learn it. It's not that hard. Did that not resonate with you? A realtor,
it resonated.
Right?
Absolutely.
Think about it. Think about it. Everybody listening. A realtor and a rental property and a family trust. It's not that hard. Do you know I teach this to accountants and their brains explode? Because they're like, oh my hell, that makes sense. It's that easy. But they do all their hocus pocus bullshit and make it complicated. And everybody's like, oh, I can't talk to my accountant. Because if they don't make it complicated, they don't feel like they earned any money. Why can't we make this easier for our business owners and strategize? So this is so easy. A revocable living trust, an LLC or S Corp for my operations, an LLC for my rental. The end. That's the picture. And then we build upon it. Next strategy. I want your kids on payroll. If you got kids in college, we're going to 1099 them. If they're under age 18, we're going to do outside labor. No W-2, no 1099. This year, your kids don't even pay taxes on the first 13 grand. Why do we pay taxes and give our kids money? They should be on the books. Now I get a write-off and they don't even pay taxes. That's strategy number 4. Kids on payroll, period. And then some people are like, well, I got to put my spouse on payroll. I want them to get Social Security. Are you kidding me? We're lucky if Social Security is around by 3033. That was the report this last month. 3033, Social Security is dead. Now, we know our country, if we let Social Security go away, the country would implode. It would be a riot, right? But the point is, have you seen what your Social Security benefits are going to be? Go to ssa.gov. Just type them in. You will be floored. You want to live in poverty? Great. Enjoy Social Security. We got to build our wealth, which brings me to strategy number 5. Are you self-directing your retirement accounts? Are you building Roth IRAs, health savings accounts, solo 401ks? They're not that hard, and you can invest them in what you know. I have a Roth IRA that's doing crypto mining. I have a health savings account that owns a rental property in Chicago. I've got a 401k that has notes lending out on a first trust deed. You can invest your 401k. Peter Thiel has a $6 billion Roth, and in 1999, he started with $5,000. You can invest your Roth IRA in whatever the hell you want. It's not just Wall Street. People, it is Main Street against Wall Street. We have got to take control of our retirement accounts. There's $13 trillion in retirement accounts, and Wall Street wants their grubby hands on every red cent. Take that money, invest it in your brother-in-law's landscaping business, in your rental property down the street. Do a fix and flip and a rehab with your 401k. Loan out your Roth IRA for hard money to someone else. There is so much opportunity with your retirement account to get 15 to 20% returns. Rule of 7, you're doubling, 72, you're doubling your money every 4.5 years. It's insane, but no one talks about it because, just get stuck in our ways. Ugh.
Mark,
Hey, you got me on one today.
Powerful stuff. 5 really powerful tips. And I know you've got to run because you've got a hard stop and a podcast to run to. We didn't really get into a lot of stuff, especially on the estate planning side. We don't have very many people in 800 episodes come back, but would you mind, carving out another time to come back and talk about estate planning? Because this has been so powerful, especially with those 5 tips.
Oh my gosh. Thank you, Ty. I would love to, because estate planning, people think, oh, I got to be rich, or I got to have kids, or I got to have, no, what's going to happen to your stuff? What type of legacy are you leaving? And do you have privacy set up for the future? And there is just so much that we could do with a good quality estate plan. And it doesn't have to be expensive. We're around a couple grand. If you're spending more than $2,000 on an estate plan, we got to get a second opinion there. And there's attorneys out there that as soon as they find out what you're worth, 5 grand, 8 grand, 10 grand. Oh, lawyers are the worst. I hate lawyers. I am a lawyer. What am I saying? Is that being recorded?
I'll edit that part out.
Anyway.
Mark Kohler, thank you very much for coming on with us today, man. This has been powerful.
Well, and Ty, and I know I came at you a little bit, but what you said was super important. You said, how do I do this? I don't want to learn this, or I don't have to want to learn. I don't want to have to learn this or whatever. You don't have to learn it all. And I want to say that out of love and compassion here. It's just knowing enough to manage the ship, knowing what my top 10 strategies are, and having a productive conversation in the summer to fall of what can I do before year end? Should I go out and buy another rental property? What am I doing with my notes? What am I doing with my Roth IRAs or my 401ks? What am I doing with my health savings account? I have a whole 3 chapters just on healthcare planning, flexible spending accounts, health savings account, how getting a write-off for all of the medical costs. The number one reason for bankruptcy in America are medical expenses. What are we doing to get tax savings on our medical expenses? Are we saving on health insurance? How are we deducting our health insurance? If you don't know, that's not good. It's not that hard to know. And so these are the tools that will help you be a master, to be a millionaire, to be a billionaire. My wealthy clients, they know this. I've got a 3-day conference in Salt Lake next week. I charge $500 for a general ticket. I'm so sick of these expensive conferences where it's like, well, perceived value, I better charge $5 grand for my mastermind bullshit workshop for 3 days. I'm like, can we make it affordable for a small business owner? I charge $1,000 for a premium ticket where you get lunch every day. We have 25 breakout sessions, 20 different speakers on tax, legal, and business that the average business owner can understand. And they're networking with CPAs and attorneys and certified financial advisors. And they're there learning about Main Street business. Come to a conference. It'll be broadcast virtual as well. And I do them twice a year. Engage in this, people. This is what wealthy people do. This is what wealthy people do. You want to know what my wealthy clients do? They know this shit. They know it.
There you have it. Mark Kohler, everybody. And listen, the knowledge is part of it. Having the strategy and somebody that is a strategist is the other part of it. And so what I want you to do is go to Mark's website, Mark, M-A-R-K-J, Kohler, which is KOHLER.com. And then there you can get the 30-point downloadable guide to be able to, I mean, think about it. We just talked about 5 tips. Think about how many are there. And you walked away with some pretty powerful strategies, really powerful strategies here. But on top of that, you can find this network. Nobody's done this. Nobody's built a network of people that have this kind of knowledge. So now you have the knowledge, you're gaining the knowledge, and you have the strategist that can actually help you through it. And you can get it all, the knowledge and the strategist, on the website. So make sure you check it out. Mark, M-A-R-K-J, Kohler, KOHLER.com. Make sure you grab the 30-point guide. Make sure you take a look at the blog, the podcast, and so many other of the free teachings that are there, Mark's social channels. And most importantly, make sure you check out his network, because this is the key to finding somebody that is the strategist that can help you save a fortune. More than just these 5 strategies, so many other strategies that you're able to tap into. It's all one place. So make sure you check out his site, and we will have him back to talk about other things to do with investments, to talk about estate planning and other things you need to know about. So we'll have him back on a second time here sometime soon. So thank you very much for tuning in. Take care. Make sure you visit Mark, M-A-R-K-J, KOHLER.com to get the strategy you need to save a fortune on taxes. Thanks. Take care. Have a great day.